Got Alex Coffey, co-host of Next Gen Investing. Thank you guys for handling things. I want to start out, KG, I want to start out with you because I don't know if you heard Oliver's last comment where he talked about a bullish comment that you made earlier today about the Russell. Can you talk a little bit about what happened here?
Well, I mean, we were kind of talking about the overall market in itself, right? The S&P 500 looked like it was trying to ramp up there, but the Nvidias and the Microns just continue to drag it down. And that's just been something that we've been looking at. But when you're looking at the Russell, a lot of optimism, especially going into tomorrow's print. If we do have a print that's in line or better than expected, that could move yields to the downside, that could accelerate the Fed's ability to cut rates here this year. And then that also can be a tailwind for regional banks, which is a huge earnings power when it comes to the Russell 2000. So a lot of optimism when you're looking at that space. But once again, the choppy action that you're seeing from Nvidia, I'm not going to say it's really too concerning right now because it's only been a couple of trading sessions, but there appears to be a significant amount of sellers selling into a lot of these pops that we've seen for the semiconductor space.
Yeah, speaking of those semis, Alex, I know you have your eye on that, and we noticed that that was kind of a part of what was holding back this market today. Kevin just talked about that. We saw weakness in Nvidia and other semis, but obviously Nvidia had made some comeback, but then lost some ground today. What are you taking away from what happened within the semis and where investors are going?
Yeah, so another pretty light volume day, Diane. But as Kevin talked about, the semiconductor trade, which has really been what's held the market to the upside, particularly names like Nvidia that carries such a huge market cap and such a weighting in some of these bigger indexes, the S&P 500 and the NDX in particular. We're seeing that rotation potentially out of those. Perhaps end of the month rebalancing for some of these institutional funds, taking money off the table of some of their winners and putting it to work elsewhere. But I've really seen the rotation seem to be out of one part of the mega caps, let's say Nvidia and Broadcom, and today Micron in reaction to earnings, into the Amazons, the Apples, and maybe those next level plays for AI, rightly or wrongly. So it started in hardware. And now it's moving into some of those hyperscaler names that are maybe the first that might be able to monetize some of this technology going forward. I don't know if this will be a short-lived trend. I don't put a ton of stock into really anything going on this week or next week just simply because it's so light of volume. But I think it's interesting to see that we have this tug of war going on in real time.
And KG, what do you make of that trend, though? Are you anticipating, what levels are you watching when it comes to that?
Well, I mean, when you're kind of looking at the trends for the semiconductor space right now, from a technical standpoint, it's looking like a little bit of a cooling off period. You can't really say it's a reversal quite yet. If that were to be the case, we would have more significant selling pressure happening in the market right now. We're just not seeing that right now. We're just kind of reassessing, reevaluating until we get that next big amount of data that comes out. Now, that's probably going to be earnings, especially when you're looking at Google, Microsoft, and looking at their CapEx spend. That's going to be a tailwind when you're looking at names like Nvidia, a Micron, and even an Intel, even though it hasn't really gotten that much love here. So I would say right now, we just have to kind of hold off, wait just for a little bit. But this is kind of the problem that Alex and I have been kind of talking about over the last couple of weeks with concentration in the market. If you have some of these leaders that now have so much of a portion of the S&P 500, you really can't do anything without them. And unfortunately, if they do stall out for the next couple of months, that's going to be a problem here. For the S&P 500 levels right now, 5,500 is going to be the key area for us to break. And hopefully we are able to break that tomorrow if we have a good print. And if we're not able to have a good print tomorrow, then I would say 5,400 to the downside would be that key area. If you're looking at a weekly chart, the candle that we have right now is basically a spinning top candle or like a doji candle, basically meaning that we've gone nowhere in the last 4 trading sessions. And that generally is looked at as a bearish formation when you are near highs. And so that's something I'm keeping my eye out on for tomorrow, going into this print and hopefully going into this quarterly expiration where we might see a little bit of fireworks.
It makes it sound like we're walking on a treadmill here, basically, like, kind of the 1 step forward, 2 steps back kind of situation. And it seems like we have a chart up still on the semis, Alex, where we're looking at, it seems like mixed messages within there. And there's this question now, is this AI trade going to continue in the second half of the year. That's a big part of what's been carrying the market. But let's widen out a little bit, unless you have a final thought on the semis. But, I want to talk kind of the macro picture. We had a lot of economic data in today for investors to chew on. Oliver talked right before our panel with Kevin Gordon about housing. But it seems like one of the concerns is there is some weakness within some of the economic data. Housing might be a different story, but what do you make of the macro picture as we gear up towards the PCE data, Alex?
Yeah, I think there's been a kind of a mixed message so far this year. I mean, there's been hope for lower inflation, but it's almost like a big part of market participants failed to kind of think about, well, what does lower prices really mean? And oftentimes lower prices only start going lower because the economy starts to deteriorate. So I think we had already penciled in no recession, no soft landings already in the clearinghouse. Don't worry about the economy's trajectory. It's just simply a question of if inflation's a problem, and then how big of a problem is it? I think what we've seen over the last month is really that isn't necessarily the case, that those risks are more balanced, Diane. And I think this week the data kind of, again, furthers that concern. Continuing claims, I think the highest since late 2021. New home sales fell substantially yesterday. You're seeing GDP. I mean, I know it's still positive, but you're in the one handle for GDP. That's not really anything to get super excited about, especially with inflation as high as it is still. But that being said, as we go ahead to tomorrow, we've already seen a lot of the inputs that will go into PCE. I think we have a pretty good idea of where this will end up. It could, miss on the margins, beat on the margins. But largely, I think Kevin Gordon in the previous segment, I caught a piece of that. I think they're pointing to the right risks at the Center for Research at Schwab. The risk is, how far does the labor market deteriorate and what does that spiral into? There's plenty of pieces within this market. He talked about the average drawdown of the average stock being way different than how the mega caps are performing. That's saying that the greater part of these companies is actually struggling a lot more than maybe Nvidia lets on.
All right, and I know for PCs, the core PCE number that matters the most. We're expecting to see it rise 0.1%. It hasn't seen a low like that in months on end, basically since sometime last November. And the last time we actually saw a drop was early in the pandemic. KG, based on some of the inflation prints that we've already seen, we've seen some slowing when it comes to CPI, PPI decline. What are you looking for to come out of PCE, and how do you expect that to impact the market?
Yeah, I think Alex, brought it up here. We get around 60 to 65% of the data points that go into PCE already. So there's not a lot of wild cards that we can actually have show up in this data. I think the biggest one that we could have is going to be the insurance cost portion of it. And that actually has been elevated in some respects, but we have seen it kind of maybe lose a little bit of ground when you're looking at CPI. Is that going to flow into PCE? That's going to be the main question for tomorrow. But usually analysts are pretty much on the ball here. We don't really get wild swings or wild misses when it comes to PCE. And in fact, a flat print tomorrow actually probably would not shock the street, to say the least here, just because of some of the disinflationary trends that we've seen in other products. And that's going to be for this month. Next month, it's going to be a little bit different because we have energy prices that have bounced back to the upside. But for tomorrow's print, and what I'm kind of focusing on is actually going to be personal income and personal spending. Alice kind of talked about it. We've already seen that the consumer is a little bit stretched. The housing market looks like it's probably feeling a little bit of pressure here in the near term, especially when you're looking at new home sales. So is personal spending going to still come in at a 0.3%, 0.4% rate? That's the biggest question. If we see that actually drop off, I think that capstones all of the other consumer data points that we have seen over the last month, from the University of Michigan sentiment to the credit card data that we've seen as far as delinquencies and net charge-off rates. That would really kind of solidify that. And then those two numbers would have a dramatic impact when it comes to GDP, and the Atlanta Fed GDP forecast would probably be revised to the downside, matching some of the trends that we saw in Q1.
Paying attention to a lot of those trends too, especially like this consumer data that we've had. Even, you had San Francisco Fed out showing that the pandemic era savings have been wound down from that high that we saw in 2021. Alex, I know you have a final thought on kind of what you're paying attention to with regard to the macro picture.
Yeah, I think one of the things that I always think is kind of fun is ahead of these events, trying to think about what I think might happen. I think there's a good chance if inflation data comes in cool, you're going to see that classic response to the upside in the markets. I love Kevin's thoughts on this too. But I want to see if that rally holds. Recently, the light inflation data rallies really have not held, as it's come with that concern about what that means for the economy's trajectory. So I think we're in a different part of the cycle now than we were 6 months ago, and I'm curious what Kevin's thoughts are on that.
KG,
I don't think the market cares. Yeah, unfortunately, Alex, I don't think the market cares. I mean, you care, I care, right? We look at the fundamental data and we get a little bit concerned when we start seeing delinquency rates and net charge-off rates matching what we saw in 2009. That's a concern for me, but this market really doesn't care. What it cares about right now is AI, and if that's going to be the thing, I think a light print tomorrow is going to fuel that. Now, once we start seeing initial claims really take hold at the 240, 250,000 level, that's where I think the market probably is going to get a little bit concerned, because that's where we start seeing the unemployment rate going up. And you brought it up earlier too. The labor market cracking, it takes a lot to be able to turn that around. And right now, we only have really monetary policy. Fiscal policy is not going to be in effect here if we have a split Congress as we come up to an election. And the fears around that type of split Congress could also then, provide a little bit of volatility in the market. So, I hate to say it like that. I think if we have a good print tomorrow, I think we rip to the upside. Is it going to be sustainable? Who knows? We only need 2 more weeks until we get to earnings season. And once we get to earnings season, we're going to be forgetting about all of these numbers, or at least the market will. I know I won't.
It's true. It does. The market often has a short-term memory. All right, we're going to put a pin in this conversation. Kevin and Alex, you'll be back with me. We're going to be